Good morning. We will do VAT today, and we will see what is the effect of VAT when goods are sold and then the person doesn't pay the goods and the estate is written off as a bad debt. What will the effect of this bad debts have on VAT? First of all, we will look at the entries: sold goods to P stock for 750. We know that as soon as we sell goods, the amount that's sold to them will include VAT. So therefore, the debtors will be debited with 750 Rand, including the VAT. We will calculate on the 750 what is the amount excluding VAT, so 100 over 114, and that will give me the sales figure. Then I will go and work out what is the VAT on that, and I will work out what is 14 divided by 114 to see what is the amount that we collect on behalf of SARS, the 92 Rand and 11 cents. So although the debtors still owe us the money, the business will have to pay this VAT over to SARS. So if you look at the next entry, you see in the bank that 92 Rand 11 cents is paid, and now we don't owe the money to SARS anymore. Okay, the next entry there is receive 500 Rand from the insolvent estate of P stock as a final payment of one on the 1st of July. That means that we don't receive the total amount. We only receive 500 Rand of that amount. So it means that I have to show that the bank is debited with the actual amount received, and debtors control is credited with the 500. On the money paid, there is no effect on VAT, but on the bad debts, you will have an effect on that. Okay, so if we look at the calculation there, we receive from the debtor 500 Rand, and the amount that's outstanding is then 250. So they originally owed 750. The amount that was received was 500. So the amount that will not be received from the debtor is 250. When we sold the goods to the debtor, we paid over VAT on the total sales, 92 Rand 11. So it means that we calculated VAT as if we will receive VAT on the total amount. Now, because this person is insolvent and is not paying everything, it means that included in that 250 is VAT. So we will say that 250 equals 114%, because it's the amount that they owe to the business and the amount that they owe for VAT. If I want to know what is the VAT portion of that, I will take the 250 times 14, the one that we want to calculate, divide by 114, and that will give us the VAT that we can now claim back from SARS, because we will not collect this money from the debtor. The bad debt section will be 100% of the 114%, and that means that the bad debts portion will be 219 Rand and 30 cents. When we record this entry, we will have a look at the ledger and see how do we have to record this. So we will go to the debtors control and show that the debtors must be decreased with the total bad debts and the VAT that was not collected from the debtors. So bad debts account will be debited with 913 Rand and 30 cents, and the debtors control will be credited to show that they don't owe that money. And then we will debit the VAT output to indicate that we can claim this money back from SARS because we did not collect it on behalf of SARS. So VAT output will be debited with 370 and the debtors control will be credited with 370. After we completed this entry, the total of the debtors control, the 770, must be equal to the 770 that we sold originally because they paid part of the debt and the rest of the debt was written off. So if we look at this exercise, what did we learn? When we sell goods, the debtors control will be debited with the total amount of the sales plus the VAT output. And then you will do a calculation to say what portion of that amount is the income for the business, and we will credit sales with that figure. And what portion of this total amount is VAT, and we will credit VAT output with that portion. That means that we owe 92 Rand and 11 cents that we collected on behalf of SARS. If we receive money, we will credit the bank, credit debtors control and debit the bank. Then for the bad debts portion, we will take the full amount and reduce the debtors with the bad debts. But we will split the bad debts between the bad debt section to show how much is the loss for the business, and we will debit VAT output to show how much we can claim back from SARS. So if there's bad debts or discount allowed, it means that the business would lose 100 over 114% of the amount, and SARS will lose 14 over 114. So what did we learn? When goods are sold, the total VAT on sales price is paid over to SARS, although the debtor owes the money. So although the business did not receive the money, they will have to pay it immediately to SARS. When debts are written off, the VAT included in the bad debts can be claimed back from SARS, so VAT output will be debited to indicate that this amount will be paid less to SARS in the future. And the bad debts portion, excluding the VAT, is the loss for the business that will reduce the profits.